it seems like you're a busy guy with a whole lot of different things, and not just one business too, and a lot of other things going on.
I consider it working smart and not hard. So I'm very focused on kind of the revenue that each one brings in. My bread and butter 2-bedroom, 2-bath condo properties generally gross about $200,000 per year.
Are you guys back to pre-COVID performance levels now?
We are, and we're not.
Hello and welcome to the latest episode of the STR Data Lab. I'm here with our next guest, John An, with the CEO and founder of Ohana Stay and Tech Tape. John, welcome to the podcast.
Thanks, Jamie. Thanks for having me on. I'm so excited to be on your show and just share lots of different things that I work on.
Yeah, it seems like you're a busy guy with a whole lot of different things, and not just one business too, and a lot of other things going on.
In my mind, they're all related, so it doesn't feel like multiple things. But yes, sometimes I have to segment what I'm working on. So Ohana Stay, which is my short-term rental business, I founded and grew that out in Hawaii, and my wife is actually taking over the day-to-day operation of that. A lot of the technology that I use to run Ohana Stay is what Tech Tape is doing. And then the other thing that you're saying, I'm busy. I'm trying to fight some regulations out in Honolulu, Hawaii. So it keeps me busy.
So yeah, maybe, and we can start with some background. I was excited when I was looking at your profile to see that you went to Cornell. I just took my first trip up to Ithaca last fall and guest lectured for a class in the hospitality school, giving them a deep dive into the short-term rental industry. And broadly, my experience with Cornell is and the hotel school there and the sort of great work they do there. But maybe talk us through, how did you go from an architecture degree to building a portfolio of vacation rentals?
Again, it's all interrelated. It's a progression. But basically, I'm in my like 6th or 7th career right now. So when I was younger, I dedicated myself to becoming an architect. So I didn't look at any other profession, nothing else. All summer schools, I went to architecture summer school to focus on that. And so initially I worked as an architect. And then as I was working, I got very interested in sustainability and environmental architecture. So I went back to school focusing on that, spent a lot of time doing that. Then I worked as a consultant in the building industry, helping people make sustainable buildings, energy efficient buildings. While I was working as a consultant, I worked with some incredible developers, real estate developers, who not only were making money for their company, but were giving back to the community and adding value to the people who were buying the properties that they were building. And so I said, when I grow up, I want to be a developer. And so I stopped my corporate job, started a real estate company, and started developing single-family homes, ground-up single-family homes. And when you're developing, it's a negative cash flow business until you sell. And so I looked for a real estate-related business where there was positive cash flow. And that's how I got into the short-term rental business. Hawaii, the reason why I chose Hawaii is, one, it's a great vacation destination. But two, it's very interesting because it's obviously part of the United States, but it's an international real estate market, whether it's for sale or for guests. And so I really like the fact that if the US had an economic downturn, other countries, China, Japan, Australia, would come in to buffer any economic downturn. And so that was why I selected Hawaii as my market. So it
So
all kind of
is
it all like there's a line to to the story, but yeah, if you go from A to point B, it doesn't make much sense.
is Hawaii the market where you were developing homes as well, or just where you look to manage them?
No, that's not where I was developing homes. I was developing homes in New Jersey. And again, during that time, so I was very fortunate as I was growing up. We had a family friend who had some properties out in Honolulu. And so we were able to go to Hawaii many times, for vacation. And because of that, I felt very comfortable with the market, even though it's 5,000 miles away. And so, yeah, so then I jumped in, and it was really hard to find good management, people who would manage it the way I wanted it. So it was little by little, I took over revenue management. I took over guest communication. I took over managing the cleaners. And pretty soon I was just doing everything. And I kind of fell into the business.
So how many properties do you have out there?
Right now, there are just 10 properties. So it's not a huge portfolio. But what I like to do is I consider it working smart and not hard. So I'm very focused on kind of the revenue that each one brings in. And so my bread and butter 2-bedroom, 2-bath condo properties generally gross about $200,000 per year. And so I kind of try to focus on that and have a smaller portfolio, and just kind of grow organically with that type of portfolio.
And so do you own the properties, or are you just managing them?
I own some of them, and I co-host for some other folks as well.
Okay. And Hawaii, you mentioned the sort of multiple demand drivers and loving that, and as a thesis for a market. But I think, as most people know, Hawaii was impacted maybe more than most destinations because of the sort of COVID-19 restrictions and not allowing people to travel to the island. So, and how did your properties fare over the past few years?
Well, COVID, I mean, literally everyone says, March, everything stopped. Literally, like the faucet just completely stopped March. People couldn't fly in unless they were, doctors, nurses. The name of the game for me during COVID was survive, right? Surviving is thriving is kind of just, that's all I thought about. I never knew much about midterm rentals, but at that point, a friend of mine, Anton from AutoHost, he's not with us anymore, but he jumped on a call with me right after COVID hit, and he gave me some pointers on how to screen guests, not necessarily technology, just kind of the fundamentals. And so using that, I was really fortunate in aligning with a doctor staffing agency. So they were flying in specialists and hospital administrators to help with the COVID relief effort. And so I probably stayed at around 50 to 60% occupancy throughout COVID. Very, very low, low rates, but the property stayed occupied, which was actually more important than it just sitting empty. Yep. And because it was through a staffing agency, the likelihood of squatters or, problems were very low. And so, I was very fortunate that I was able to kind of make that path work. And so about a year and a half was literally just doing that. And then first quarter of 2021 is when I started to see some glimmer of hope with things starting to recover.
Yeah, so a glimmer of hope back in 2021. Are you guys back to pre-COVID performance levels now?
We are, and we're not. So we are in the sense that overall financial performance, 2022 was actually better than 2019. So financially, 2022 was really good. The reason why I say we're not is just the market patterns, the booking patterns, everything is completely upside down. So it's a lot more staying on top of what's going on and responding and reacting, as opposed to like knowing, what I anticipate to happen. So one example of that is international travel hasn't really picked up yet. Some are coming, but it hasn't. And in Waikiki, where I'm located, the international travelers were what made the shoulder seasons, solid bookings. So right
Yep.
now I'm having the ups and downs and, the last minute bookings that I'm not accustomed to.
Yeah, and we put out some research on that in markets like Oahu, and almost 50% of demand comes from international guests. And definitely a theme of what we're expecting is Asian travelers, especially with the return of China to the sort of international China market or travel market, could be a big tailwind for 2023. Is that part of your expectations for the year ahead?
I keep close tabs on it because that will be another series of pent up demand, similar to what we saw from the United States. So I'm hoping that trend, when that does open up, will buffer some of the economic, downturn issues that we're having, across the industry right now.
So you said, and maybe some differing trends on lead times on international travel not fully back, and I'm assuming a lot of those type of guests book much further out in advance, which gives you that sort of confidence in how you're going to price those sort of short-term bookings if you need to fill in. Are there any sort of other broad trends you're seeing in the data today?
Just like you said, the booking window has compressed dramatically, and not only in Hawaii. So, I provide revenue management services in lots of different, multiple markets, Australia, Texas, New Jersey, Arizona, and in different ways. But all these markets seem to have like way, tighter booking windows. But that tighter booking window does not necessarily equate to discounted prices. And so it's kind of odd because usually it's like, last minute you give discounts and you get it filled up. But sometimes people just want that, want to stay. And so they're willing to pay market rate or maybe even slightly higher than market rate. And again, that's where constant monitoring of what's going on as opposed to relying on historic data is kind of where I'm seeing how to stay ahead of the game, at least right now.
Yeah. So staying ahead of game, like what is your sort of near-term, long-term, midterm strategy? Is it, and are you looking to expand the vacation rental industry and your vacation rental business? And you said your wife is going to be taking it over, or is it more maintained? What is the outlook there for you all?
Yeah. So despite the regulation and things that are going on in Hawaii, I still really like the Hawaii market, and I had actually looked up all the zoning requirements in 2016 when I started short-term rentals. So in Hawaii. And so all my properties are in areas that are legally zoned, even though they're trying to take that away right now. So for the short-term rental business, we have made a conscious decision to stay focused in one market. Building out a team that really operates the way I want them to operate has been a lot of work, and I don't want to try to repeat that elsewhere. I know other people do it all the time. I'm just, that this is just my decision. But the reason why I'm focusing my efforts on tech tape is there are lots of processes and things that I've noticed that not only I've run into, but other people run into the same problem over and over again. And so I'm trying to grow that aspect of the business to, kind of help the industry, hopefully with what I've learned, and also to grow my business.
So before we dive into tech tape, which I do want to do, and you mentioned regulation, and that's and obviously been one of the top concerns for our industry. And what are you seeing in Hawaii, and where do you think it's going? You said, and maybe even trying to fight some of the regulation, and what's going on the ground there?
Yeah, let me talk about Hawaii and the kind of general trends that I'm seeing across the country. So in Hawaii, especially on Oahu, which that's the market that I'm most familiar with,
Okay.
um, there is a concerted effort to essentially squeeze out all the short-term rentals and essentially leave hotels as the only option. But like the legislation is very clear on that. Um, and so there had been long-standing regulation or rules. That's how I was able to look up zoning when I was initially looking into Hawaii. But they're trying to change all that around. So, hotels get one tier of benefits, and then we're kind of squeezed out a little bit at a time. So recently there was a bill that became ordinance that, to put it in very simple terms, 90 days was considered the minimum length of stay for short-term rental. And it excluded certain resort zones, but across the island. They passed it, but fortunately there was a lawsuit against the city and county. And so right now there's an injunction so that 30-day minimum can still be operated all across the island. Now at the state level, they're trying to, throw a lot of these regulations. One says 25% occupancy tax only for short-term rentals, but not for hotels. A lot of rules are being thrown our way. And fortunately, because of the previous bill, we were able to organize and kind of build a network so that we can collaborate. And so right now, there are several bills at the state level that actually after this call, I'm going to be getting on a call with a lot of the stakeholders, and we're just trying to make sure that we're acting in unison and not, each island acting on its own and inadvertently harming one another. So that's the landscape there. Like I said, I still think Hawaii is a good market, but it's a challenging market to navigate. Just the big picture, the way I see regulation right now is it's kind of like a pendulum swinging. For too long, it was a free-for-all. There was no regulation. People were doing whatever they wanted. And so now we're kind of on the other swing where regulators have figured out we have to do this, length of stay, and they're going extreme to one end. And I think right now it's kind of, we're in the process of finding that equilibrium. But it's a painful process as the pendulum is swinging.
So, and what would your advice be to investors looking at markets and trying to get understanding of regulation? And generally, I've heard, and I talk with investors a lot, they want to find markets with maybe impending regulation or regulation where certain types of uses are in place where they can get a license, operate in a lot of ways like you did, where it maybe restricts future investment, and you can sort of and maybe have a advantage by getting in that market early. But then, and maybe there's the opposite of, and you're in this market now, you've got major investment, and now you might get regulated out of business. So how should people be thinking about it, and what are ways that they can do to, and maybe prevent, and what you're saying?
Yep. So I definitely agree. I feel like I have a competitive advantage on Oahu right now because I already have properties that, should remain legal, and it has created a barrier to entry in that market. So there's definitely that. The problem is the rules of the game can change, even though there are established regulations. That's what I'm dealing with right now. In markets, I would say like in Arizona and Texas, I think what we're seeing right now is where it was previously not regulated very well. Those markets also, like, there's so much supply now that those markets have suffered. Sorry for my dog. Um, what I would say if you're going in is, one, be active in your advocacy effort in that market, right? Just from day one, consider it part of the cost of doing business. If you need to, I've been going around, contribute to the VRMA Advocacy Fund, because that's kind of the umbrella organization that can potentially help. But there's always local alliances. Get to know your politicians, right? If you're not going to be living there, find a friend who lives there. But like, the more you are in contact with the people who are making decisions, because they think it's a very simple issue. And then once we start explaining to them that, there's this nuance and there's that nuance, that's when the politicians actually start to understand. So I think you just have to get involved in the advocacy effort from day one.
And do you find that once sort of the politicians start understanding the sort of nuance behind it, and all the investment money coming in, the tourism dollars being spent, and a lot of the good things that the short-term rental industry sort of brings to these local areas, that they're swayed, or is it an uphill battle?
It's an uphill battle. No, and I'm very jaded, but some politicians, and I have an example right now. They understand the nuance, and like, they've kind of shifted their focus, right? So on one of the state bills, some of our members have been discussing the issue with the representative that introduced the bill, and he has done a 180. He didn't realize how much negative impact it would have on the local residents. At the same time, I feel that many times these bills, the decision is made before they're even introduced. There's influence from other industries, other travel industries. So it feels like sometimes they're already like decided upon, and they're just going through the process so that it looks like a public process. So the other thing that I will say is, get involved in advocacy early on, but during that advocacy time, build the capacity to fundraise, so that, should you need to get a lobbyist, or should you need to, bring on a legal action if something, passes, you're kind of ready at that point. And that's one of the things that we messed up on Oahu, is we thought our advocacy was enough. And once it passed, it was just like, what do you do? Fortunately, another group stepped in and sued the city and county, and that's what's kind of kept everything at bay.
Well, sounds like you're part of a good effort going on there, and look forward to and seeing the results of that. Let's jump into Tech Tape, because that is, and what you said is your new focus today. So tell us about the company and what you're trying to solve for there.
Yeah, so all the services that Tech Tape provides, it comes out of all the pain points that I have run into in my short-term rental company. But then I've noticed my colleagues in the industry run into the same thing, and everyone thinks that they're running into the same issue over and over again. So the first, we provide revenue management services, and that's just something that people spend a lot of time on, and no one knows what the right price is, right? And so it's a lot of guessing, and I've kind of systematized the process by which you find what that right price should be given any point in time in the future. And so that's essentially designed to help them make a lot more money but save a lot of time, right? So that's really what the revenue management service is. The other service is we build semi-customized workflows that don't exist in your current tech stack, right? So I've changed PMSs more than 15 times in my journey. And it's because I was always searching for, there's got to be a solution that works the way I need it. And what I've come to realize, and I validated it speaking with lots of other operators, because there's no short-term rental school, right? Everyone builds their business, however they built their business. And the tech providers cannot anticipate how you're operating. And so even if a feature is there, it might not be implemented the way it works for your business, right? And so then people go and search and try to find another PMS or another solution. And so if 80% of your tech stack is working for you, but you have like 2, 3, 4 real pain points, and if you could just address those things and your tech stack would be working, then TechTape can build out those workflows and maintain it for you so that it's almost like having that feature set in your business.
So it sounds like you're taking a lot of the existing technology out there. So whether it's in the major revenue management companies and like Price Labs, Wheelhouse, Buoy, the like, the existing PMS systems that people are already implementing today, and you're going to either run the revenue management for them or help them sort of and do the integrations, do the and little additions that sort of really make it work for them and make it work within their business. Is that right?
Yes, that's actually a perfect summary. The name TechTape is a play on duct tape. So I have no pretense that this is some refined, really it works. But I leverage what other people way smarter than myself have already built and then try to make that work for your business.
That's great. So I assume that since you're in each of these tools on a day-to-day basis, you're having a good sense of the different strategies out there for managing and for revenue management. So how these dynamic pricing tools work. So how, and given that we're in a very dynamic environment today, we've got half the markets out there where occupancies are increasing, half are declining. And how are you thinking about revenue management strategy just in general today?
My approach and strategy, it's coming in handy now, but it's actually the same way that I've been operating, which is really finding what the market will bear, what people who are booking, what's that sweet spot that they're willing to book, not too low so you're not giving it away, not too high so that you're staying empty, right? And that approach, so basically in very simplistic terms, the price and length of stay are the levers. And the occupancy is kind of the result that you see to calibrate what you want to do, right? And that you do that over multiple periods of time, not just 30 months, 30 days, but 60, 90, And it's actually been, since fall, I've had some clients where their occupancy just plummeted. And they're like, I don't know what's going on. And I started working with them. And within about a 2 to 3 week period, I was able to get their occupancy back to something, that a business can operate under. And so, yeah, the strategy is really not what the market is doing. So I'm sorry to say, not the data that Transparent or AirDNA is saying that this is the number, this is what the ADR is, because that's just the average of what happened, right? And so that's really good for benchmarking after the fact.
Is it?
But as you're looking forward, I actually have instances where I told Tim Spiker from Buoy, his graph really like showed me where I was performing, right? And in this instance, I was 2x the 90th percentile in the market according to his data. But I was like, if I was looking at this, I would have been happy at 20% higher than the market, right? So like
Yeah.
the data can really like hamstring you because you're like, oh, I can't push it further than that, right? So there's kind of a balance on how you use the data.
Yeah. So, and it sounds like you're well outperforming your market, your comp set. And on a typical revenue management, is it because you're sort of and holding out and getting those last minute bookers and you're able to sort of keep your rates high, or are you getting the right bookings further out in advance? Like, and help me think through like what is that strategy that you're implementing?
So the strategy depends on the client, right? There are some clients, it's a combination of what their preference and their risk tolerance is with what I believe will work in the market. So, but a big part of my strategy is having a 1 year open calendar, because then different people find different value based on how far out things are. And then that right person is shifting as you're getting closer and closer and closer. So I really like to have like a full year to work with and use the price and the length of stay as levers to protect the calendar, but get that kind of booking. And then it shifts again when it gets to the midterm, and then it shifts again when it gets to the short term. And by combining all of the above, at the end of the year, you should be well above, someone who always plays last man standing, or someone who always, is looking for that far out booking.
Yep. So, what do you think? And the audience is mostly like, and hosts or owners with 1 to 10 properties. Like, what are the key data points that they should be looking at? What are you looking at on a regular basis when sort of forming your strategy?
So for me, occupancy and pacing are the two key things that I'm really focused on. And I'm focused much more on the trends that I'm seeing. Is it going up? Is it going down? How fast, how fast is it getting booked? So it's the trends that are important. And I always find the actual data point to be less important. And I think a lot of people look at the data point, right, and say, okay, this market is a $250 ADR market. This is a, $150. And that I'll dive in just a second. Because the short-term rental market is an immature market, right? It's a lot of individuals kind of all guessing. If this is a hotel, it makes perfect sense to look at the data point and say, okay, this is a $200 market, and then base off of it. But because it's kind of a free-for-all right now, I think the data point is meaningful for benchmarking purposes, but it's really the trends that you really should be focusing on, like looking ahead.
Yeah. So given that you're looking at the trends in all these markets, like, are you feeling good about the health of the industry right now, and what's your sense of where we're at?
I am cautiously optimistic right now. Again, things have shifted quite dramatically. So if you continue to do exactly what you did in 2022, 2021, you're probably not going to do very well. And I think those are the folks who are saying occupancy is going down. But what I am seeing is if you are adjusting to the new trends that are happening, yes, maybe your ADR is slightly lower, but then you make up for it in occupancy, right? And I'm not saying that's a general rule that always happens, but like in multiple markets, I've been able to accomplish like 25, 30% above market by, the ADR being just a tad lower than what my client was normally comfortable with, and then being able to boost up the occupancy. So I think the demand is still there. I think you just have to be much more nimble than you had been in the past.
That's great. So, wrapping up now, and you maybe hinted about some of the things you were expecting for a year ahead, but if we came back a year from now, what do you think is the big headline for the industry over this next year that's going to play out?
One, I think our industry is maturing really fast right now, and it's really exciting to be part of the industry as it's maturing. So I think it's going to be much more stabilized. You know how I told you pricing is all over the place? I think there's going to be more rules of engagement that people start latching on to, which means then, the variance is going to be much tighter. So I think the industry is going to be much more mature. And then the other aspect is our industry is highly fragmented. And I know a lot of people talk about consolidation, but I actually think with efforts like Tech Tape, but what other people are doing like Enzo Connect and, other folks, that there's going to be kind of a defragmentation of there's a lot of things, but you're able to kind of make it work so that it's not just one consolidated, monolith that's your only choice, but you actually have a lot of choice, but they kind of start to work together.
Yeah. And I talk with people all the time, and sort of worried about the complexity of running a short-term rental. And then you talk through all the technology that's out there today that can help you automate, that help you sort of run the business pretty efficiently. And then you combine that with a Tech Tape, it makes it where you don't have to be part of a big conglomerate. Use a large property manager that you can and begin to really piece it together and do it yourself. Do you agree?
That's exactly, I let's see. The last thing that I would want is for there to be just like a Microsoft and Google within the short-term rental industry, right? Like the diversity is really what makes this such a vibrant marketplace. And there's so much entrepreneurship in this industry that people are coming up with solutions all the time. And if you consolidate, you start, all that starts ending. And so, part of Tech Tape is trying to make sure that you can use the best tool for your business without having to, go to a Microsoft.
And that said, do you worry that our distribution systems are so reliant on Booking.com, Airbnb, and Vrbo?
Yes, but then there are also a lot of very credible, not just efforts, but like processes that people have created. Mark Simpson from Boostly, Damian Sheridan on Book Direct, that I'm hopeful we're not going to get away from Airbnb. I mean, like it's not going to happen, right? But a little less of reliance on the OTAs, a little more self-reliance on your own booking website. I think that is going to happen.
Well, I agree. So I'm maybe we'll wrap it up on that note. And for listeners that don't know Mark Simpson, definitely look him up. The Book Direct show with Damian Sheridan. Great conference, great movement going there. John, if people want to reach out and find you, what's the best spot for them to do that?
So I'm pretty active on LinkedIn, and so if you search John on or Tech Tape on LinkedIn, you should be able to find me. You can also email me at john.an at gettechtape, gettechtape.com. And that's the best way to reach me.
Well, great. And again, thanks for joining. And for all the listeners, please reach out to John if think he might be able to help you sort of reach that next level in your short-term rental business. John, thanks.
Thank you, Jamie. This was a lot of fun.